What's up YouTube, it's Louis here, hope you're all well. Today we're looking at Quant on the daily time frame. I'm going to explain why we didn't actually continue to the target today. We were talking about it on the 15-minute yesterday, but yeah, let's dive into that right now. On the 15-minute time frame for Quant. In yesterday's update we were about over here. I was saying if we want to draw a golden pocket over here, which we did in the video, and I was saying I think it was just over here. I said let's continue to hold this. We can't drop below the 55 as long as we're above this now that we've created the reversal wave, as from over here we were meant to go down like that, and instead we created the reversal wave by flipping it into support right here, and that's where we were in the video. And I was saying we're waiting for it to break above the 786 for a pump towards the 1 fib level. Once it clears the 1 fib level, it's onwards and upwards to these targets and to the range high up here 130 as well. 125 at first, but of course, did we close above the 1 fib level? No. So that brought us back down to here. If we lose the golden pocket, again, we created the reversal wave, which is something we shouldn't have, and then we invalidated that over here. So that is our reasoning for why we actually didn't come up and meet the the double bottom breakout target at $125. So if I just get rid of that for now, and we look at where we're trying to find support. So it was where I actually gave you a descending triangle a few weeks ago, or maybe a month ago now. Yeah, back at the beginning of December, we had this descending triangle over here, and we met the pattern's target, flipping it into resistance with the double bottom neckline, but failing to close below the support you created over here. You came into it again and you bounced because it was an area of demand, and we broke the double bottom neckline. We've just explained why we're coming back down today, but this is what we need to do. We need to avoid something called the EMA repel. So that's where these fail to cross over and you just continue in your downtrend and they fail to cross over. What we need to see is us closing today's daily candle above this wick over here, $115. Now let's stay, now that we are above, let's stay above $115. The 55 EMA is 117, so that would be even better, a close above that. But to be honest, you are allowed to come to $115, and the reason being you have your 20 EMA here. We've already set a wick down here today, 113, so we just can't lose this area. Basically can't go below the 20, and us holding above this with wicks going downwards, it's going to suggest that we're holding it as support, and so we should expect this continuation upwards. So that's what we need to see for the bullish case. If in any point in time we're having daily candles below the 20 and we're hitting our heads on it, we're going to come back down to $100 in and around there, or into this demand zone. That's $100 to $110. This will be the scenario that we should all expect if the 20 EMAs lost on the daily time frame with a daily candle close. But again, if we're seeing a daily candle close today above the 55 or above the 55 or the 20, this is good enough for the continuation upwards. We're just coming back down, potentially forming an inverse head and shoulders over here, right shoulder, and coming to the range high. This is where I expect resistance and a rejection, then we'll take it from there step by step. But that's pretty much it. I know this was a fast video, but I just want to say we're almost at 5k. Make sure we're getting there, so share this video, bump the algorithm by liking and commenting. If you are interested in the mentorship or the course, they are currently discounted at the moment. Just private message me, and yeah, check out those channel memberships if you want, and send in a super thanks if you want. Cheers.